Maybe in the longer term, a Trump presidency could be good for the US dollar. Craig Erlam, Oanda. Janet Yellen is giving her speech in Jackson Hole, Wyoming today. What impact will her comments have on the currency pair in the coming month?
I think it's going to have a big impact. There's going to be two massive drivers for the pound versus the dollar. One, of course, is going to be Brexit. But then the other aspect is the US. Fed said at the start of the year that it wanted to raise interest rates 4 times this year. It's failed to do so. Now, there's been a number of reasons behind why that may be, including the turmoil at the start of the year, triggered by the Chinese devaluation of the yuan. I do think the Fed wants to raise rates in the next few months, and I think they'll probably move in December and look to maybe move 2 or 3 more times next year. But whether they can stand by this and whether they do stand by this is really what's going to dictate just how far the dollar goes. So there's so much really feeding into what's going to happen in the cable over the next 6 to 12 months. I do think there is more downside to come because the outlook for the UK is not great and the uncertainty factor is likely to weigh on the pound. And then I'd say the dollar is looking a little bit more bullish because the markets aren't quite pricing in the number of rate hikes, which I do think the Fed will want to achieve if possible.
The US election is in November, and with a controversial campaign trail, what will happen to the currency pair in the coming months?
Obviously, it will always depend on who wins the election. At the moment, we've got Clinton, who is ahead by 10 points in the polls, so that's looking like the most likely outcome, although there is still months to go, so you can't really get too comfortable on this matter. I think a Clinton outcome would be the best thing for the US dollar. The simple reason being there's no uncertainty factor associated with it. Most people would assume that we're going to see more of the status quo with the US, which means the economy continues to perform relatively well. A Trump victory in the election really does throw up so many uncertainties initially, and I think that could be bearish for the US dollar. It could delay the pace at which the Fed is able to raise interest rates because of the uncertainty factor. Not just from a domestic viewpoint, maybe in the longer term a Trump presidency could be good for the US dollar because of his ideas in terms of corporation tax.
Now that Britain is on the course to leave the EU, will the pound dollar see any major shifts in the coming year?
It'll all depend on when it is that the UK invokes Article 50, if the UK, of course, invokes Article 50, and when the Federal Reserve does raise interest rates. If, for example, the UK invokes Article 50 after the turn of the year and we get a Fed rate hike around December, which I think is currently what people are broadly expecting in the markets, then I think end of 2016 starts 2017, you may start to see that pound versus dollar heading lower. And I think we could see the pair end up around that 125 level, assuming we do get that one rate hike and talk of a second combined with Article 50 being triggered and the uncertainty that therefore causes for the British pound. It's important to note that there's so many factors which are feeding into the movements in the pound dollar that it probably makes it one of the most difficult currency pairs to predict at the moment, because the way the Fed keeps changing its mind on monetary policy and because we don't know how the UK government is going to handle the negotiations, how much information the people of the UK are going to get and what certainty UK companies are going to get, because if emerges early on that the UK is going to have some part of the single market which may put companies at ease, then they may be willing to invest again, which would be supportive for the economy. But if we get radio silence, for example, for the first 12 to 18 months or even the full 2 years, then that will create so much uncertainty that will be a major drag on the economy and therefore the pound as well.
Thank you, Craig, for helping us clear some of the uncertainty surrounding this currency pair. That's all from me, but I'll see you after the weekend. Goodbye for now.